Good evening, everybody. Thank you very much for joining in. This is latest in the series. We're going to speak about currency trading, and in this we are going to speak about stops. Well, this is a very important term nowadays because in 2015 we have saw a lot of volatility in the foreign exchange market. In fact, currencies are swinging by over 10%. Now take a very simple example. Stops play a very important role in the trading of currencies. Now here I am not talking about exchange traded. I am talking about NDF. I am talking about deliverable trading. I am talking about hedging, speculation, arbitration, spatial arbitration, non-spatial arbitration, anything. All these stuff would pay in this. Stops play a very important role. From this side, I am Rahul Magan, working as a corporate treasurer in EXL, and I'm going to let you know about what do you mean by stops in currency trading. Now please pay a very good attention here. Once you deal, example, what all transactions companies would have? They can either hedge, they can either speculate, they can either arbitrate, they can do exchange rate trading, which TCS is doing, which they are doing in future, or they can do the non-deliverable forward. I am talking about non-deliverable forward, but of course you would have a non-deliverable swaps, non-deliverable option, non-deliverable OIS, so and so. And here I am talking about, say, offshore treasury markets. Offshore markets. Now, in this all, stops play a very important role. What do you mean by stop? A stop is a point which would let you know where exchange rate, commodity price, currency, any object would move, any financial instrument would move. Take a very simple example. If currencies are falling like this, and this is a point. Now technical term, technical analysis, those people who are doing that and would have a strong hold on the technical analysis, they would refer this as a key reversal point. They would refer to this as a key reversal point. Now here it may go up and it would continue to move up. This is known as stop. This is a stop here. Now if the currencies are rising, take a very simple example that, and from that point it had started fallen. Now this would be a stop. Here you should sell. Those people who are using oscillators, they would term overbought, they would refer oversold and XYZ. But this is not overbought and this is not oversold. This is to stop. Now what do you mean by a stop? Now this key reversal point which is here, that key reversal point in technical terms is known as stop. All the traders should understand the stops. If you are doing a hedging, you should know what is the point where you should hedge. And stops play a very important role in speculation and arbitration, because if you don't know what's a stop of the currency, you are bound to lose. Take a very simple example in the live example. GBP to dollar, which is currently trading as roughly 1.5750, it went higher to 1.58. There are various views in the market which suggest that it would go to 1.60, it may go to 1.65, but this is the stop. Now here people should sold, and those who sold, GBP went down to 1.57 and they got a gain of one big figure. They got a gain of one big figure. Now this is a stop. Or take our other example, INR, which went to 64.35 times, and after that it is trading at roughly 63.60. This was a stop. All those who sold here, they would have a gain of roughly 60 to 70 paisa here. So stops play a very important role in currency trading, and all those who are doing a stop would need to understand the fact that if you don't want, I'm not saying that as a corporate treasurer or as a proprietary trader you should understand all the you need to know the stops, but it is your ultimate duty to predict the stop. If you don't be able to predict the stop, then you enter into a stop loss mode, and once you enter into a stop loss mode, you are bound to lose, because if this is a stop and you had not sold, it's going down, ultimately your stop loss triggered. If this was your stop and you had not done that, it failing down, ultimately you enter into a stop loss mode, and here is going to be right. Stop loss and stops play a very important role in currency trading. I know this video is getting technical. In nutshell, stops are the point where the exporter should sell, or importers from an exporting point of view you should sell. Stops may be a point where an importer should buy. I know nobody in this world can predict the currency market, but at the same amount of time as a treasurer and a prop trader, one should understand the fact that if you are able to predict the stop, then you are able to do the transaction in a well way. With this, I would like to close the video, and I'm going to again state the fact that stops play a very important role in currency trading, especially if you're doing hedging, you're doing speculation, each and all. Thank you very much, and you're most welcome to contact me at 919899242978, or you can email me at rahulmagan8@gmail.com. Thank you very much, and thanks for your time.